Hi, welcome to this video today, which is on the subject of improving the profitability of your trading strategy. Now, there's a simple way to do this, in my view, from most traders. It's to trade exotic currency pairs. Now, most beginners coming in the markets, most retail traders will tend to stick to the major currencies or major crosses. I personally think including the exotics is a great way to enhance profitability. Why? Because they're so volatile. And as a Forex trader, you want volatility. Okay, now, first of all, what is an exotic? An exotic is just a term for a lesser traded pair, or one with less liquidity than the majors. Okay, now, in terms of them having less liquidity, they've still got really great liquidity. You pay a little bit more on the pip spread, but that's more than compensated for by the volatility. Now, in terms of what we're going to look at today, we'll look at the personality of various exotic pairs and how to trade them, and how to trade high volatility as well. Now, before we go and take a look at all these points in more detail, just to remind everyone, subscribe if you wish to our channel so you see all our content. You can also join our free mailing list on the link beneath this video to get the best in FX education, and also what we consider to be the best trade setups and opportunities. You can also follow us on Facebook, join our Facebook group of traders, and finally check out our Recommended Regulated ECN broker. We'll offer you a wide spread of exotic pairs and also excellent pip spreads. Now, the first thing I want to look at is volatility in the exotics. I'm not on the exotic to start with. I'm on Euro USD, the most popular Forex pair. Now, in terms of a 6-month period, we topped out up here. It's a downtrend with kind of short covering rallies along the way. Okay, how much is it as a percentage move from here to here? It's just under 5%. Okay, so we'll look at another major. I'm going to look at some exotics. Let's take USD CAD. If we would go from here, 128, down to where we are now, how much is that as a percentage move? It's about 4%. Let's look at a couple of exotics. USD try here. How much is that? It's about 16%. Okay, and that's in what period? Just under 2 months. So yeah, it's a really good uptrend, very volatile. Okay, USD ZAR, US dollar South African rand. In terms of this chart, you can see how volatile it is. From here, this rally up there, that is around 14%. That drop, and this drop comes in less than a month, is 9%. 9% rally, 7% drop. These are approximate figures. 7% rally. So the exotics, yeah, very volatile, and you want fast moving pairs. Okay, you can say the euro is a good downtrend, but it took a long time. Okay, yeah, obviously the try, fantastic uptrend, didn't take very long at all. So very volatile. I'm going to now, I've just written up some points on Storyboard. I want to go through why the exotics are so volatile, and our favorite exotics to trade, and how to trade them, and also how to trade volatility. So let's go to the Storyboard. Right, I've written up 10 points, and I just want to quickly go through. It's just a brief introduction to trading exotics. You can join our mailing list. I think I said it in my intro, where we send trading opportunities. I'm also preparing a PDF with a lot more info in on this subject. Now, in terms of point number one, to do with volatility, Forex major currencies represent economies which are developed. They've got broad-based strength. The countries tend to have high GDP, politically stable. So volatility most of the time between the majors is not going to be as big as if you trade an exotic currency against a major. Exotic currencies represent economies that are less developed and more sensitive to global economic conditions, such as global expansion, global contraction. There are also many of them influenced by commodity prices. They tend to have high interest rates because they've normally got high debt and they need funding. Okay, now in terms of the different exotics, I've just grouped them into 3 groups: Eastern European, Czech krona, Hungarian forint, and Polish zloty, and we love trading these. They're very influenced by the euro. Okay, so if the euro is in a strong uptrend, these currencies, the Eastern European currencies, very often be moving faster to the upside than the euro. If the euro is in a downtrend, they can be moving quicker to the downside. So very often when we're looking at the euro, we're not looking to trade the euro itself, we're looking to trade these currencies. Okay, so really like Eastern Europeans. Emerging markets, you've got South African rand, Mexican peso, Russian ruble, Turkish lira, Chinese yuan, and some brokers will give you the Brazilian real, which is a really good currency to trade. Now, in terms of exotics, okay, any exotic, they're not always, trading in high volatility and big trends. They'll spend a lot of time chopping around. So you've got to be selective in your trades, come off big levels, etc. We've seen obviously the Turkish lira in a really big uptrend, and also the ZAR. As I'm doing this video, Mexican peso, USD is just pushing up on it. Looks like it could become a big trend. Russian ruble over the last couple of months, as I've been, last couple of months has been in a strong uptrend against other majors such as the USD and the euro. Okay, so be careful, wait. Right, let's go through these 10 points quickly. Now, in terms of Forex major currencies, they represent economies which are well developed, broad-based. The countries tend to be rich or have big GDPs, politically stable. So volatility most of the time between the majors is going to be lower. Obviously, the exotic currencies represent economies less developed. They're more sensitive to global economic conditions, i.e. Global expansion and contraction. They tend to have high interest rates because they have high debt and they need funding. They just will be more volatile, not all of the time, but when volatility comes, it comes in a big way. Now, in terms of exotic currencies, Eastern Europe, you've got the Czech krona, the Hungarian forint, and the Polish zloty. And we really like trading these Eastern European currencies. Very influenced by the euro. So if the euro is in a really, really big uptrend, these currencies will very often be moving faster to the upside than the euro, and vice versa in a downtrend. So very often when we're looking at the euro, we're not looking to trade the euro itself, we're looking to trade these currencies. Okay, now in terms of what I call emerging markets, you've got South African rand, Mexican peso, Russian ruble, Turkish lira, Chinese yuan, Brazilian real. Now in terms of these emerging markets, just in general terms, they can be choppy and sideways a lot of the time, but when they get moving, as you saw with the Tri and the ZAR, they really do trend well. Mexican peso, at time of me doing this video, is starting to go into a nice up move. Okay, Russian ruble's been really strong recently, big trend against the euro, for example, and the USD. Okay, now in terms of what I call MISC exotics, the NOK and the SEK, Norwegian and Swedish krona. NOK, like trading the NOK, heavily influenced by oil. It's the most oil-sensitive currency, and the Swedish krona is a really nice currency to trade, or has been over the years, with really nice trends. Okay, if you're trading exotics, you want to trade longer term, come off big levels, don't do short term trades. In terms of, they are a little bit less liquid, obviously, and this pip spread is a little bit higher. In fact, I've always advised against trading too short term anyway, like day trading and so forth. But you want to do a swing trade, a few days to a week, or long term trend following trade, the exotics will give you good opportunities. Now, pip spreads, they vary between brokers much more than in terms of the major pip spreads. Okay, most brokers are pretty close. There's big variance in terms of exotics between brokers. I've given you, broker gives really good spreads beneath this video, and you can find some more. What's carry interest rate impact? It's very important in terms of the exotics. For example, Russian ruble is pushing the USD down. Why? Because traders are basically looking for the carry interest, 9% on the Russian ruble. So if the USD is going down, that's great, get capital appreciation and also interest as well. Euro is in a big downtrend against the Russian ruble. It's got negative rates. Okay, now in terms of don't just trade the USD against the exotics, you can trade the other majors as well. We very often use the euro and Swiss franc in particular. Okay, in terms of the exotics, this is really a quick introduction to trading them. But if you're a Forex trader, you want movement, okay? You want trends, you want volatility. Fast moving pairs means your money works harder. And if you've got a soundly based Forex strategy, okay, with an edge, you should be able to trade any currency pair with it. Okay, so yeah, there's my introduction to trading the exotics and why I think yeah, if you look at them or exotic pairs, you will increase your profit potential. Right, that is the video for today. Thank you very much for watching. Take care. Have a good day.